Pullbacks are undoubtedly one of the most profitable trading concepts out there. And the main reason I love trading pullbacks is simply because they give you opportunity to risk less and they aim for a higher profit in the market. So in this particular video, I'm going to share with you every single thing you need to know to be able to trade pullbacks profitably. So with that already said, hello guys, welcome to my channel and welcome to Perez Trade. On this channel, I mainly focus on how you and I can actually make money through forex, crypto, and stock trading. So everything on this channel is mainly focused on trading, and whatever strategy I share, it can actually help you trade all these markets that I just mentioned. So without taking much of your time, if this is your first time here, consider smashing that subscribe button. Also, turn on the bell notification. So let's get straight on my computer. Let me share with you every single thing you need to know to trade pullbacks profitably. First of all, we are going to break down what exactly pullback is in the market and how you can trade it profitably. So let's get started. So hello guys, now that you're on my computer, I'm going to share with you exactly what pullbacks looks like, which sort of pullback you should consider trading, and how you should look at pullback from different perspectives of the market. So now the first thing you need to do when trading pullback is that you need to identify pullbacks in a trending market. So for example, let's take uptrend as an early example. So for example, you came into a market and realize that the market is moving in this direction. So you came into a market and realize the market is moving in this direction. So now what does this tell you? This simply tells you that the market is an uptrend because the market keep going what? It keep going higher and higher. So now with this in mind, now where you look for a pullback is simply at the higher lows. So now in case you don't know what higher lows simply means, let me identify it for you. In an uptrend, this top area is called the higher highs, simply because this one here is higher than this one is higher than this one, so they are identified as higher highs. And this below part is known as, which is this lower part that gives power to the market, is known as the higher lows, simply because each of the lows are higher than their previous ones. So now when it comes to trading, your pullback areas aren't the higher highs, but simply the higher lows that lead to creating more higher highs in the market. So when it comes to trading pullbacks and identifying pullbacks, in an uptrend, you should be focusing on this higher lows, which is the area whereby I drew this blue line through. However, the main market isn't really as accurate as what you are seeing right now. So now let me show you exactly what a pullback means here. So for example, you see after the market created this high, the market is always likely to come back to retake it in order to complete this other high. So for example, if the market moved like this, created this high, and then came here like this, and then went upward, this new high isn't completed unless this market comes back to retest this previous level before the high is considered to be completed. So until this happens in the market, the high is not completed. So when a market is moving upward, it's always likely to come back to this previous highs to complete its higher highs and then complete its pullback. So for example, when trading pullbacks, when you are in the market, first of all, you need to identify these key areas in the market. So you always wait for the market to pull into these areas before you get in, because these are the areas of pullback. So here is a high and here is a pullback. Every pullback, before a market is considered as a pullback, it should be able to retest the previous high that it created, which is this one here, because retesting this high simply means that this other high has been completed, and so forth and so on, like this one here. So like for this other end, now we can say this market hasn't done what? This market hasn't created a pullback simply because it hasn't come back to retest this high. So a good entry for this market will be at this point. So now this is what a typical higher highs looks like when you draw it out. So these areas here are your pullbacks, because these are the areas where you should be considering getting into the market. So for example, if you miss the market at this point here, if you miss entering the market at this point here, at least you also have an opportunity to enter the market over here, or you could wait and then enter the market at this other side as well. Now this is what a typical uptrend, a typical pullbacks looks like. But then if a pullbacks move in this manner, so for example, if a market moves in this manner, creates this one, goes up, create this one, goes up, and then comes back below this one, below this other pullback here, you can see if the market moves in this manner, it's no longer considered, this one here is no longer considered a pullback because it has changed character. The market is no longer seen as an uptrend again, but a possible downtrend. This is one thing you need to understand. So when trading pullback, you should be looking forward to trade pullbacks in an uptrend in this manner. Pullbacks shouldn't break below their previous pullback. So this one here is a pullback, this one here is a pullback. Why? Because it hasn't broken this one. but whereby this market breaks up to this level, if this market should come down to this level before, we will say it's no longer a pullback anymore, simply because it has taken the previous swing low, which makes it no more valid again, which simply means that the market can decide to change into a downtrend from there. So for example, this market right now that I see that has broken this previous pullback here, we will see this market making a movement like this. Market can decide to from here come back here and then start its own downtrend. You see, this is how the market might decide to move. So when trading pullbacks, one thing I advise you to do is that don't get into pullbacks that has broken below their previous lows, because it simply means that the market has changed direction and it could soon be a downtrend. And one of the easiest way for you to understand this concept very much is watching that my other video that talks about market structure. It tells you exactly what to expect in an uptrend and what to expect in a downtrend, because every single movement in the market simply shows that it's either the market is continuing in that direction or is changing to the opposite direction. So this is simply what a typical uptrend, a typical pullback in a downtrend, in an uptrend looks like. So now let's also consider it in a downtrend if the market is moving downwards. So if the market is moving downwards, the market will come like this, this. Am I getting this right? Let me go back a little bit. So in a downtrend, it will look like this. Okay. Yes, it will look like this in a downtrend. Like this, it will continue like this. So these are a pullback in a downtrend actually looks like in reality. Let me go a little bit backwards. I'm sorry for that. Mistakenly use the delete command. Okay, so now let's have it like this. I want to show you the reality of the market to tell you that it's not always smooth like this. So over here again, it's a downtrend, and this how pullback looks in a downtrend. In a downtrend, we have what we call the lower highs and then the lower lows. So for example, in a downtrend, this top, this side here will be identified as the lower highs. Meanwhile, over here will be identified as lower lows, because they keep going lower and lower and lower. Now when coming to trade a pullback in a downtrend, your main aim is to always identify the previous lower low in the market. Always wait for the market to pull back into that area before you get in. And one thing you need to know is that the market might not always pull back to that exact area, but it might come closer. So this way trading patterns actually comes in, that I'll share with you when we start using the real market to actually test this pullback strategy. So you see these areas here, they are the ones known as your pullback area that you can get into the market. So for example, if you miss the opportunity to get into the market at this first pullback here, this first one here, if you miss this opportunity, then you also have an opportunity to get into the market at this other pullback here. So this is simply what it means. And when pullbacks come into similar lows, like this one, you can see this new pullback came into the exact position at this old one. When both are equal in this manner like this, let me say, when both pullback are in an equal position like this, it's not considered an invalid pullback, but it's even considered a more stronger pullback, simply because the market has created a double top, and a double top simply means that the market now has more momentum to actually sell lower. So now that you've seen what exactly this pullback looks like, let me show you with the real market to tell you that the real market is often different from what we draw for you. Now here is a market between what? Australian dollar and Swiss francs. So now if you look at this market right now, what do you see? The market is literally ranging, but it seems like the market has broken out of the ranging area. So let me just reset this chart. Note what I'm doing here is actually a bar replay of Australian dollar and Swiss francs of a market that I personally traded earlier the week. So if you look at this market right now on the 1 hour time frame, you can see clearly that the market is just ranging. The market has this higher point in the market. Let me get it out. Okay, let me use something more thicker so that you can actually see it. Okay. So you can see we have this point whereby, okay, let me just take it from this point here. You can see that the market has an area of resistance there. It has another area of resistance here. And then we have this area of support. So if you look at this market in general, what the market was simply ranging, and it has now breaking out of this ranging area. So let me just take it from the week. You can see that the market just broke out of this ranging area right now. So now remember what we said about pullbacks. Pullback are areas whereby the market come back to retest previous key levels in the market. And you should be looking for pullback only when the market is fully trending to a particular direction. So for example, if you look at this market right now, what do you see? The market is going upwards, and this one says what? The market is actually an uptrend. Let me make it white for you to see, and then make it a bit thicker. So you can see this one shows that the market is going upward, and the areas of pullback you are looking for is waiting for the market to come back to the previous highs. This one's here are the one you can see the market clearly did that. You can see the market moved from here, it got here, came back here, and then when it broke out of this area, you see that the market came back into it again. You can see that here. Here you have a pullback here, and then the market went again. Here it gave us a wick as a pullback, and then you can see that the market has now broken out of another swing high again, which you can probably break back into again. So now when you see a market in this manner, let me say you missed this first pullback, this first set of pullback, let me say you've missed them, and now this is where you are looking for in the market. So now what you can actually do from here is simply get rid of this resistance area, because it's no longer valid again. So since the resistance area is broken, it's no longer valid again. So as a trader wants to trade pullback, your main aim is identifying this recent high the market created and then waiting for the market to come back into it again, because the uptrend just started. The reason I say the uptrend just started is simply because you can see that the market was in a ranging area, and this was the point whereby it broke out of the trend, came back to retest it, and then broke out of the overall high, came back to retest it again. So now you are waiting for a pullback to this recent high that the market created before getting in. So now let's see what the market actually does from here. So for that, let me play it. Let me take the speed a bit up. Okay. So now you can see the market just came back into the high again. Remember what I told you about trading pullbacks? If the new pullback is lower than the previous one, it simply means that what? That is no longer valid. And if you look at this market right now, this one broke out of this area, but what did it do? It did not get below this other one. So this simply means that this pullback here is still valid. So as a pullback trader, once the market pulls back like this and they give you this bullish candle in an uptrend, it simply means that the market is okay for you to place a buy right now. So based on the way I trade pullback, personally, I'll get into this market, but then I'll use a 15-minute time frame for that. The reason I'll use a 15-minute time frame is that I want to see if the market has given any sort of high valid pattern. And if you look at it on the 15-minute time frame, what do you see the market did here? The market came here, gave us this weak rejection within the area of the trend line, and then went back upward again. And now you can see that it has given us this minor bearish candle. This simply means that you've gotten a good place to enter this market at this point. So now when trading pullbacks, at this point whereby the market pull back to the recent high, what you can simply do is that simply get your position taker. So let me say you're entering the market here, plus the spread size you might enter around here. Now your stop loss position when entering market in a pullback, here's one thing you need to know. Your stop loss position should be below the previous low. If it's an uptrend, the market should be below the previous higher low. So here was the previous higher low. So make sure that your stop loss is some pips below it. And this is the purpose whereby I'm using the 15-minute for the entry, so that I can see the recent low the market created and make sure that my stop loss position is below it. The reason why our stop loss position needs to be below it is simply because this market you see here can decide to fall back here to create a double bottom here before shooting upward. So if your stop loss position is not below this area, there's a high probability that the next pullback in the market might get you out. Because even though we have the new high of the market around here, this is the latest high in the market, to have it around here, it doesn't necessarily mean that this market you are seeing here will just break above and then come back to retest it. This market might decide to pull back into this area again before coming back to retest it. So now I've shown you how to place your stop loss position in a pullback market. Always make sure that it's some pips below the recent pullback. Now in terms of take profit position, I will always tell you, keep it at a decent profit position that you think is okay for you. So for me, when I'm trading pullback, I always aim for a 1:2. So no matter the size of my stop loss, I always set my take profits into at least ×2 of what I'm risking. Now here's the reason why I set that ×2 and not at this recent key level. The reason is that this is an uptrend, and an uptrend, you don't know when the trend will end. So the only way you can benefit more from this market is making sure that you are riding the full trend, because you don't know exactly where this trend is going to end. So me personally, when I'm trading an uptrend, I always set my take profit position at a very higher position. The reason why I keep my take profit really high is that I don't know when the trend will end, and I don't want to miss a lot of things that will come from the trend. So I always keep my take profit position at a decent place. Normally, if I was trading a ranging market before, I'll put my take profit around this area of resistance here. This way I'll put my take profit in a ranging market. But since it's not a ranging market but an uptrend, I have the belief that the trend can still go more higher again. So for that reason's sake, I will always keep it at 1:2. And if I come and meet the market around my take profit position and I see that there's still more momentum, that the market is not going to end there, I do get rid of my take profit, and then I sit and watch what the market is doing until it gives me any sign of rejection. I won't get out of it so I can benefit from the trend in general. So for example, here is your pullback, here is your entry. Now you go, you see, what did you see the market did here? The market pulled back, even though it did not get to this area here. You can see that the market did some pullback. So let's say you keep your stop loss position here before, you would have been out by now, but then keeping it below the previous high, the previous low, simply gives you more belief in the market that okay, there's still time for the market to come into your direction. And now another thing when trading pullbacks that you need to know is that once the market pull back to this area, the previous area here, don't get in immediately. The reason why you shouldn't get in immediately is that the market can decide to break below and then change direction. So before you get into a market that pull back to a key level, always watch out for the market to give you rejection. So you can go search on Google right now, different price action candlestick rejection patterns out there. Go search for them, and in case you don't know any of them, you can join my Telegram channel. I've uploaded 3 different books about price action and candlestick trading that will help you understand the concept of each candlestick and know what exactly each candlestick means. Those books will actually help you understand and know how to enter the market just with the help of a candlestick. So now with that aside, we are still in this trade, so let's see exactly what the market do. It's either we hit stop loss or we'll see what the market does from here. So now let's see it go. So now let's pause it first and see something. You can see we are in profit right now. And if you look at this market carefully, you can see that the market has already given us another pullback again. Let me just mark it out. You can see this was the area here, the recent high, and the market has given us a pullback. So over here is another good position for someone to enter the market again, for someone who wants to enter. And I know you've probably seen people who drop signals and then have multiple trade in the market. Well, the main reason why they have this multiple trade is that they are always on their chart, and then they are always looking at where the market is giving them more reason to get into the trade. So let's say at this pullback now, for me, I get in again, and then let's see what happens from here. What did you see? You can see that the market still did what? Took me to my take profit again. And now you smashed 2 different take profits. So now based on the way I trade pullbacks, once the market came back to retest this area and then bounce off, I'm going to get rid of my take profit and wait until the market get to the overall position before I'm actually going to get out. Until the market gives me any sign of rejection, until I'm going to get out. So this is simply how you trade pullbacks. And when it comes to a downtrend market also, is the opposite of the original one. So when trading pullback, here are the things you simply need to do. The first one is simply identify the market trend. If it's an uptrend, mark the recent higher high in the market and wait for the market to pull back into it. If it's a downtrend, mark the recent lower highs. Now, that aside, the other thing you need to note is that when a pullback pulls back to the recent key level in the market, don't get in immediately until it gives you a candlestick pattern that shows that it's going to continue in that very direction. Like for example, if you look at this trade that we took over here, when the market pulled back here and came below, you can see it gave us this big bullish candlestick with a wick. You can see this bearish engulfing candlestick here that was here gave us what? A weak rejection at this level. And then this bearish bullish candle that also formed immediately after it also gave us a rejection. This shows that the market is rejecting this level and there's more momentum in the market that is actually going to buy to the upside. This one qualifies that we've gotten a good reason to enter. And another thing to note is that make sure that your pullback shouldn't be lower than the previous one. So for example, take a look at this market. Here is the first pullback, here is the second pullback, and what do you see? They are both at the same level. Now here is another pullback here, and here is another minor pullback. What did you see? None of them is lower than the other. Now take a look at this other pullback again. It still didn't come below here. So as long as the pullback hasn't taken the previous low in the market, you are still safe enough to get into the market, provided that you get enough reason that shows that the market is still going to move to that direction. So this is pretty much simply how you trade pullbacks. They are not really complicated. Simply identify the key levels. So for example, here is my key level in this market here. The market pulled back into it. I wait for a entry confirmation, then I got in, and then the market gave me another pullback at this other place here. I saw another reason to get in, and then I got in immediately. So this is simply how you trade pullbacks, and then don't make it look complicated. Just identify the recent highs and you are good to go. So in case you don't know how you can identify these highs in the market, then you can watch the other videos I'm going to tag in this description. I'm a pure price action trader, and I'm going to tell you that I only trade based on what the market shows me and not any other thing. So you can go watch that video that talks about how to trade the trending market. That helps you identify an uptrend and a downtrend and shows you the key levels in each of the market for you to easily mark out. And also watch my other video that talks about support and resistance, because when trading a trending market, support and resistance is also important for you to know when exactly the market trend is moving and when it's not trending. So that already said, hello guys, hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section as well. So that already said, have a nice day. Bye.